are a Sri Lankan bank. This is our home. That's why we are committed towards the future of this country, funding national development initiatives, because we believe in banking beyond transactions. HNB, your partner in progress.
Welcome to LMD TV. I'm Andrea Melissa. First up, Anushan Theagarajah delves into the issues pertaining to the banking sector in this turbulent time with veteran banker and current CEO of Cargills Bank, Rajendra Theagarajah.
Welcome to the show, Thea. Now, just to start off with, to what extent has the banking sector been impacted by this pandemic?
So I think there are a couple of things as far as people are concerned. The people's personal safety in terms of employees has been a challenge. And I think the industry has collectively managed to, do whatever it has while keeping the industry as an essential service on, has also taken as much as possible precautions to protect the personal safety of staff to the extent that I don't think we had a single casualty to date. So I think that's a great thing. So in addition to that, I think one thing which has happened in the last 2 months with the pandemic is both locally and globally, Sri Lanka being an island, cross-border trade inflows have slowed down. In terms of exports, inward remittances, they've slowed down. Locally, also tourism has slowed down. So with that, you are seeing both on the individual customer side as well as ranging from small and micro level businesses to large corporates, you are seeing a slowness in receivables. So with that, you are seeing naturally a concern for liquidity in the system. So because normally a bank funds itself literally 9 times more than what the shareholder equity is by public deposits. Now, we also look at renewal of deposits on one side, and secondly, also on repayment of loans to redeploy those loans back into the system. Now, with this particular incident and some of the measures which the local regulator has taken with that moratorium, naturally, term loans, whenever a borrower has made use of this moratorium, for 6 months out of the year, they are asking, when they ask for a deferment, that amount of cash does not come into the system. So that amount of cash is deprived from the banking system in terms of recycling and redeployment. So that is one issue which I think has confronted all banks in terms of managing their liquidity in this particular situation. I think in addition to that, concern for portfolio quality is naturally there. It is still early days, but I think all banks will be also monitoring their portfolio qualities to make sure that there are no shocks.
On that note, now the stock market crashed recently as well. How did that impact the banking sector?
So for the banks who were involved in margin trading and financing people who are on the stock market, definitely there would have been concerns because the values would have come down so badly on margin calls. Whether the banks, actually the bank I currently run, we don't get into that business. So I'm not able to personally comment, but if I look at the industry as a whole, I would have been surprised with that sort of drop, whether many banks would have actually enforced the margin calls. What would have probably been a better way of approaching it is looking at it as a temporary dip and trying to identify and work with the individual margin players and wait for the market to rebound back. And it's a medium to long-term approach as opposed to short-term approach.
What are your thoughts on the dropping of interest rates by the central bank?
So my thoughts is from stimulating the domestic growth, I think it's a good idea because one needs to look at really at this time to really get a hand on real economy as opposed to trading and look at the pumping of the real economy. And I think for that, whether it's manufacturing, whether it's innovation, whatever it is, the cost of capital becomes important. So I think bringing it down to single digits, I think what the regulator did was initially they brought the policy rate down to 7%. And then I think now it has come down to as low as 5.5 or 6%. So in a way, I think that is a good sign. I know you can't satisfy all stakeholders. Depositors will not be happy. But I think somebody has to make some sacrifices in a situation like this for us to come out of the situation. So I think I am all out to support a single digit based lending rate in this particular point in the country's.
Yeah, moving on from that, how do you view the government's Saubhagya program in terms of providing capital for businesses?
So 50 billion amongst 30 odd banks and maybe 20 or so NBFIs. In my humble opinion, that is not enough. It's not enough. Let me rationalize it. I think collectively the banking system in total has a loan book in excess of about 10 trillion rupees. 50 billion is around 0.5% of the overall ecosystem of loans. And SME, I don't think accounts for 0.5% in the system. Probably, let's assume even if it's 30, 40%, 30%, I think the demand for this capital will far outstrip the supply. So that I think will be an issue eventually. And the question is going to be how will the regulator, the central bank which is administering the system, give priority initially to the small timer, ideally the MSME and the SME space, and not get this limited pool of money crowded out by the big boys.
Thea, we'll take a small break right now. We'll be right back after a short message from our sponsors. Stay tuned.
We are a Sri Lankan bank. This is our home. That's why we are committed towards the future of this country, funding national development initiatives, because we believe in banking beyond transactions. HNB, your partner in progress.
Welcome back. We will continue our discussion with the CEO of Cargills Bank, Rajendra Theagarajah. Now, Thea, we were talking about the government's Saubhagya program before the break. Now, continuing with that thought, what is your opinion on banks requesting collateral for this program?
So I take the view that when there is a pandemic and there is a crisis, if we are looking at a jumpstart of 2 months working capital, this is not for project financing and stuff like this. 2 months of working capital, asking for incremental security at this moment in time, I think is less practical, because it's only 2 months of working capital. What is probably more important is for the respective banks to understand from individual borrowers who are making this request, whether the request is genuine, to backtest and validate the actual calculation of the 2 months working capital, and really maybe strip some of the non-essentials and identify the true need for that working capital. And if that can be backed with either a good access to a market which knows that the income flow will come in and that there is an ongoing business, then look at supporting it.
Moving on, what other steps has the banking sector taken to mitigate this economic problem?
So I think it's maybe 3 to 4 approaches. Top in the order of list would be the personal safety of staff, because staff, whatever we talk about IT and technology, banking is about relationships. So I think preserving the intellectual capital by making sure that everything is done, whether from working from home or limited phasing in, with personal protection of staff is point one. And I think the industry has done that very well. Secondly, managing, monitoring and conserving liquidity. Each institution, I think there are frameworks. Banks have particularly run typically for liquidity, but I think extra caution and extra concern in the last 2 months would have definitely been having attention on liquidity, which I think is important. Third aspect is, of course, portfolio quality, to make sure that this doesn't spike any unnecessary new challenges in portfolio quality, and managing that is important. And the fourth area is tightening your belt. In this particular environment, personal, institutional belt tightening and personal belt tightening is equally important, because on one hand, the banks are also owned by shareholders' money. So if shareholders are willing to empathize and support a situation like this, there has to be also some sort of reciprocity for banks to also exercise a moral responsibility in belt tightening.
Yeah, now everybody's talking about this new normal. Now, what is the new normal for the banking sector?
So I think some of the trends we have seen in the last maybe 2 months, you have seen, due to necessity, a significant shift in the payment platform patterns, the adaptation of mobile payments, the internet-based, mobile banking-based platforms are increasingly being used. And if I may quote, I think in the first 15 days or 14 days leading to the Sinhala Tamil New Year, the smaller ticket payments which went through CEFs, the Common Electronic Fund Transfer System, was close to 50 billion rupees in those 14 days, which was, I think, a quantum leap in relation to the previous 3 months. So that showed people increasingly adapting, even those who previously had the tools, who never used it, now shifting, which I think will be an increasing way forward. So people will get out of the fear of using that. And the second one is e-commerce. E-commerce, we are seeing ballooning, and with e-commerce comes the opportunity for banks which are in the card and payments business to adapt into new ways of payments, like internet payment gateways, to support businesses with those tools, which is not a credit thing. It's actually a transaction enablement tool. Then also, as you may know, Sri Lanka has adopted the national QR code benchmark. This is a classic environment which is there to stimulate more and more small, medium, and even larger institutions to adopt the national QR as a payment mechanism, which is very good. The third thing is, I think, along with this, there are various articles and thought processes that there will be the death of the bricks and mortar. Frankly, I don't think in Sri Lanka the bricks and mortar will die overnight. But I think what you will see is this is a window of opportunity for the digital and the mobile-enabled financial services to take an incremental role over and above what was happening in the past, and open the windows of or the eyes and the minds of bank CEOs as well as boards to look at the digital banking space more objectively as a business model. But that is definitely going to be there to stay. And of course, on the personal side, working from home has demonstrated that things which were hitherto, which were not considered to be practical, has now taken place. In the bank which I run, say 3 months ago, if we looked at the possibility of running a call center from people's homes, from agents' homes, was a non-starter from a security point of view. But with this problem, we actually started to introduce a limited scale remote call center operation. And I think going forward, we will learn from those positive learnings and scale that up as one example.
Well, let's hope everything works out the best. Thank you, Thea, for joining us on the show. It was a great pleasure.
My pleasure. My pleasure.
Up next is Andrea Melissa with more. Stay tuned.
We are a Sri Lankan bank. This is our home. That's why we are committed towards the future of this country, funding national development initiatives, because we believe in banking beyond transactions. HNB, your partner in progress.
Welcome back to the show. COVID-19 proved to be an unprecedented challenge for the corporate sector as all but essential services operations came to a halt amid an extended period of lockdown in several parts of the country. The latest LMD Nielsen Business Confidence Index, or BCI Survey 2, paints a dismal picture. Set against the backdrop of the coronavirus outbreak, the BCI plummeted by a whopping 52 basis points to 93 in April. While this marks a major dip in the index and into double-digit territory, it is above the 12-month low of 62 recorded in May 2019 following the Easter Sunday bombings. Whereas taxes and interest rates are no longer cited as the most pressing issues for business in Sri Lanka, the coronavirus is deemed to be the main concern among corporate executives alongside the value of the rupee. And while the economy and political culture are high on the list of major national issues facing Sri Lanka, COVID-19 is cited as the most pressing concern. In addition, respondents highlight the adverse impact on daily wage earners, citizens not adhering to curfew laws, and an inability to access and obtain daily essentials. So the outlook for the index appears to be gloomy as the corporate sector has been offered little respite in the face of COVID-19. Moving on to the economy. Prospects for the economy have taken a turn for the worse, with a majority, which is 62% versus 16% in March, of those polled, stating that economic conditions will deteriorate in the coming 12 months. In line with this, expectations of business volumes improving in the next 12 months have also declined to 44% compared to 60% in the previous month. As for the short term, a mere 13% of those surveyed anticipate sales volumes to improve in the next 3 months. Conversely, at least 6 in 10 respondents are pessimistic where short-term business prospects are concerned. 60%, up from only 32% in March, of those consulted have a negative view of the prevailing investment climate in the country. Well, that's our show for the week. Don't forget to subscribe to our YouTube channel and follow us on Facebook. Thank you for watching LMD TV. Stay safe.